Let's stick with AI. Apple's AI initiatives could very likely bear fruit, but that success has already been accounted for in the stock's current price. At least that's the argument being made by analysts at MoffettNathanson, who initiated coverage on the stock with a neutral rating. Joining us now is the analyst behind that call. We've got Clay Griffin. He's the analyst with MoffettNathanson. Clay, it's great to have you here. So talk to me about why you think all this excitement for AI, or I should say Apple's push into AI, why that's already been reflected. Clearly, we've seen a nice run up in the stock, but why you don't see further gains?
Well, we'd argue that right now the valuation is pricing in an iPhone cycle that really would need to far surpass what we saw in the 5G cycle. And so when we went back and looked at the 5G iPhone cycle, we noted that there was just a confluence of factors that really pushed that forward. There's COVID, there was massive fiscal stimulus across the globe. In China, Huawei was handicapped by the sanctions in that particular market. And so we really like Apple's positioning relative to trust and privacy, and their reputation with the consumers unparalleled. So there's opportunity there, but it's hard to really to capitalize a catalyst for an upgrade to new hardware and also price in a subscription service in the same breath. So we think the market's already there. There's tons of appreciation for Apple's position. Your prior guest made a great point in terms of Apple's capital intensity relative to the other big tech. So those things are all clear advantages. We just think the market's already there. We look at price to earnings, and it looks like, on our math, that Apple's trading at roughly a 10-turn advantage to the broader market, and more expensive even than kind of at the dawn of the iPhone. So there's enormous expectations and embedded in today's valuation.
And so with that in mind, I mean, what is expected to drive the mass adoption, that critical mass moment for AI and at people's fingertips? Because that's what our previous guest, Tony Wong, was quipping as well and asking, because that's what's really going to play into some of these companies eventually getting up to or growing into the valuations that they've already run ahead of.
Well, Brad, I think we think it's going to be sort of a fully functional and really compelling, a wow moment around Siri, the personal digital assistant, right? So it's been 10 years, and really has Apple and others really have not been able to execute on that promise. So we would look to that. There's obviously challenges around the globe when you think about how are they going to implement this Apple Intelligence strategy in China. What are the terms and conditions that are going to be applied there? You've got in Europe, you've got the Digital Markets Act, which is going to make it difficult for Apple to really lean on its advantages when you think about vertical integration. But we think that a truly compelling, smart, helpful Siri that has personal context, knows things about you in terms of your contacts, your calendars, those types of things will be enormously helpful. But it's going to take a while to get there.
Clay, I want to bring up, or I guess more focus in on one of the points that you just brought up, and that's the regulatory risk, that side of things. You mentioned in your note that has largely been dismissed here by the street. What do you see as that real risk that should be priced in or could be priced in?
Well, I think that clearly the most proximate risk is the Google risk, right? So Google pays Apple upwards of $25 billion a year in terms of its rev share on mobile search, right? They're the default mobile search on iOS. And so we've seen that in district court. They've deemed that construct illegal. Google, of course, will challenge that and appeal that. But that, to us, that's the biggest risk. But there's regulatory risk across the globe. If you think about what's happening with App Store policies, not only in the U.S. but particularly in Europe, and that could slowly kind of chip away at what is really a powerful operating profit stream for Apple. Very high margin business. We've seen the services business really grow and add gross margin profit over the years, and so that's the real risk, is that the Google relationship is deemed illegal and ultimately goes away.
Clay Griffin, MoffettNathanson analyst, thanks so much for taking the time here. I see the Lawrence Taylor shout out in the background there with the throwback from UNC. It's going to make a couple of New York Giants viewing fans very happy. Thanks so much.
Thank you. My pleasure.